Hi. In the previous two videos, I had talked about going direct with a question mark and also going index with a question mark. Now, this video is going multi-factor index with a question mark again. Okay, so the question mark means that this is not a recommendation. You have to do your own homework, research, etc. But it's something interesting to put on your radar and for you to consider. Good. So when we talk about multi-factor index investing, there are 4 funds, and Motilal Oswal has a presentation which is 55 slides long. So if you want that presentation, I tried to find it on the web, but I couldn't. I got it from some person who sent it to me. Then you can DM me and I will send you the presentation, or you can reach out to me. So there are 4 factors: value, quality, momentum, and low volatility. And the weight for each of the factors is equal. And these are the 5-year CAGRs. And as you can see, the blended 5-year CAGR is 26.08%. The AUM on these funds put together is quite low. It's around 2,000 crores. So these funds are not yet very popular, but slowly they might become. So why they are not popular is a little bit of a question mark for me, because the returns seem to be quite good. So the benchmark of these 4-factor funds is the Nifty 200 TRI, and using algorithms from the 200, like the value factor picks 30 stocks, which denote value, and similarly, the quality one picks 30 stocks, and so on and so forth. So in some ways, the risk of the universe from which these multi-factor funds pick is a little less than the Nifty 500, because the small cap and mid cap components of the Nifty 500 are a little more risky. The other interesting thing is that compared to the Nifty 200 benchmark, the upside capture of risk for this fund is 103, which means that in up markets, this combination does 3% better than the Nifty 200 TRI. While in down markets, that's the most interesting part to me, the score is 86. That means it does 14% better in going less down in down markets than the Nifty 200 TRI. Now, if you compare this to the 5-year CAGR of the Nifty 500, it's the 5-year CAGR of the Nifty 500 is 19.48%. So there's a significant gap between the Nifty 500 and this multi-factor CAGR over 5 years. And if you look at Parag Parikh FlexiCap, then Parag Parikh's FlexiCap slightly beats the multi-factor thing with a 26.50% CAGR. So for the core part of your portfolio, where you're trying to essentially more or less meet the market, you may want to see whether these funds fit in. And then for the part where you want to beat the market, you could look at index funds in small cap, mid cap, or in active funds, whatever. So for that reason, I wanted to put these on your radar. So you can, of course, find out more by asking your advisor, and or use sites like Bharosa Club with the Explore Funds functionality to see how these funds are doing. And you can always ask them questions through support or book a call to kind of learn more. Of course, Bharosa Club will not give you advice. But your advisor should be able to tell you more about these funds. Thank you very much for listening to me.